All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for the 26th of August. This will be our last one for the month. In fact, a couple updates. We will do no Thursday trade findings and adjustments. And we also will not be having a Monday, no Monday, Labor Day, Hurley Investments Market View commentary because the markets are closed Monday. So as you guys have heard over time, obviously when it is a closed, well, big money's out of the market most likely on Wednesday. So when it's a holiday and markets are closed, you typically don't want to trade in a low volume type of environment. It also means that sometimes big money's out, so you're going to be chasing the small guys through the next couple days, meaning primarily Thursday and Friday. Just to let you know, we got a couple more welcome Bruces from Tony, I already said Larry. Bruce came to everyone. Hey, sorry, just found out where to type. Bruce says hi to everyone. So good to have him with us. So just as a commentary, what we'll probably end up doing is we'll probably switch next Thursdays to like a Tuesday night commentary, and we'll make sure we do one to keep you guys updated on what we see coming up for next week. So look for those adjustments. Right now, the plan is to do a Tuesday commentary, and we'll probably stay away from, again, another trade findings adjustments next week. And then our next full week, we'll go into it like we always do. All right, pretty interesting. A lot happened over the weekend. With that said, Houston, we have a problem. I'm going to get this back in here. We actually have three major problems which will affect our markets hugely starting as quickly as a month all the way till the end of the year. The first problem we have is our housing. So much that if you spent any time going through Kamala Harris's DNC speech, this is one of the main points she's talking about. But we have existing home sales to the for the lowest July level on record ever. Someone tell me, why is this important? Why is this important right now to know or understand that existing home sales are the lowest inventory on record? Why is this important? How does this affect our markets? What are we looking at here that we need to worry about? There we go. So it's Mod, very interesting comment there. No one is moving due to interest rates. That is not correct according to this chart. Now, the person that said that's going to say, but Kevin, you said that 2 weeks ago. And I did say that 2 weeks ago. But according to this chart, it's not just the interest rates. It is also a supply and demand. We have one other problem. Huge problem. And I think this is where most people are like, for crying out loud, inflation and housing prices is still too high and will most likely remain higher into the next year. And actually, that's not correct. I said that wrong. Not into, it's going to be through the next year. Now, why is this a problem? My house has appreciated significantly, but a third of my housing payment, more than a third actually, $1,400 of my housing payment, more than a third, and I'm just going to go ahead and type that in there, more than a third of my mortgage is property taxes. My house has appreciated so quickly and so fast that, and let me do the math for it. Wow. That 41.5% of my mortgage bill is property taxes. Problem, if I sell my house, and this is the Salt Lake City, Utah, Provo County areas, if I were to sell my house, my best opportunity is about an hour south, east or west, where I'm picking up equal square footage for a cheaper price. To capture that profit in the house means I've got to relocate my family. A kid that's a senior, a kid that's a sophomore, a kid that's an eighth grader. I can't laterally move to a cheaper house in my area. I've got to pick up everything and move. So in order for people to capture this great pricing on their house, it could be a job change. It could be a change in schooling for kids. It's moving out of a pretty good area into maybe a not so good area to capture that profit on the house, pay the house off, and off you go. A comment was just made, and it's very relevant and very important. Yes, but you won't get the same interest rate now that you would have gotten a few years ago. So most people think twice about moving. That's 100% correct as well. But interest rates are still what, 5.5? 6.5%. That's a little bit under the normal 7.5 to 9 that housing prices have been, except for the last decade. So you could actually say, and you're probably correct in saying that those expectations have changed over the last 10 years, and people aren't willing to get back to normal either. But we have an issue that we don't have starter houses on the market. Part of the zero interest rate was buying bigger homes, having great appreciation in some of these homes. And I've got two of my kids out of the house. They're like, Dad, I don't know when we're ever going to buy a house. Their beginning wages for their jobs truly don't offer them an opportunity to purchase a house. This is a generational effect that's going to affect those of us that want to sell our houses. The opportunity to every 5 to 7 to 8 years move into a bigger house, nicer neighborhood. We've priced ourselves off of the traditional or the somewhat traditional opportunity to capitalize on our housing gains, to move into a bigger home, a nicer area, et cetera, et cetera. And I said no, but I'll give it to you. Yes, it is interest rates that people want cheaper mortgages. Everyone does. But more importantly, it is a supply and demand. We don't have those starter homes out there. Most of these home prices are $500,000 or higher to that $1.5 million, which realistically, I mean, boy, $1 million home out here in Utah, I guess $900,000 was $8,800 right now. You'd like to obviously move some of the profits from your home into your new home, so you at least have 20%, so you don't need PMI. But pretty interesting, pretty difficult. Another comment just came in, and I want you to hear this because it's spot on. FYI, I pay more in property taxes than my gross income 50 years ago. You might be able to say that you pay more in your property taxes than your gross income 40 years ago. But wow, that is an interesting point, that home prices have moved up so far so fast with these zero interest rates that really we've locked ourselves into where we're at. The typical home building, moving out every 5 to 7 years, bigger, larger home. We've disrupted that home purchasing process that we have here in the United States. And it's very hard, if not impossible right now, for first-time homeowners to get into the market. Why is this a problem? It's a problem because, one, less people are willing to invest when they're paying higher rates for home prices or for renting. And two, this is one of most people's main retirement, is the sale of their house to downsize, to take that money to live off of through retirement years. And I'm going to talk about that process here in a minute. Okay, number 2, Houston, we have a problem. NVIDIA is a problem. Someone tell me, why is NVIDIA a problem right now? There are multiple answers here. Why is NVIDIA a problem right now? Anyone have an idea? So that's one of the largest Mag 7 stocks and has become a bellwether stock. Just mean it moves the whole markets, right? Ooh, really interesting. Maud, I'm going to hold on to that one for a second. Ooh, I like that one too. Moved too quick, too fast, if that's an easier way to say it. But that's 100% true. Maud, I'm going to get to that in a second. All right, so let me go through this one. Any funds have to, at this time, reallocate the fund and NVIDIA due to the fund model, which they could have good earnings and it can be bad. You most likely will see a sell-off. If you look at how far NVIDIA's moved, it has caused a balancing nightmare for every fund that has NVIDIA in it. Each fund that's set up that has NVIDIA in it is based on a model. Each model is based on a certain allocation, and the allocation has been thrown out of the window. It's moved so far, so fast, that even if you want those shares in your account, the fund has to sell them because it's become too much of a position in the fund. Much like Warren Buffett's done with Apple and Bank of America. Funds have models to try, they never do, but to try to predict future returns. Every model has to rebalance according to the fund allocations. So what does this mean? Is good news or is it bad news? Is bad news or is it good news? NVIDIA is caught in a trap. It happened to Apple about 10 years ago, happened to Microsoft. Remember when Microsoft moved so quickly and people had to sell it off and it didn't have the growth that it used to have? This is something we need to pay attention to on Wednesday. More importantly, it probably will continue to crush the numbers. And that is very easy to state based on both Intel's and AMD's most recent earnings reports. Now, I wish you could say if you could understand it based off of Meta's as well, but they will probably continue to crush the numbers. Unfortunately, when we get the initial pop higher, we then need to see how the market reacts. For us, it's going to be simple. A pop above 140 to 152, we will add a second set of puts to protect the initial bounce. We're going to see if it sells off. But the last thing we want to do is see it move up to 140, 150, see rebalancing the last 2 hours, and watch it come down to $126. If your money is sitting in a fund, a 401k, managed by any of the big boxes in the community, the Goldman Sachs, the Transamerica, Northwestern, not only were you unable to capture the big run up from NVIDIA, the little minute bit that it's in your accounts is getting rebalanced out so that they can count on diversification instead of a top-notch company. I was going to show it last Thursday. I need to apologize to you. The trade for last Thursday is the same one today. If I was looking to get in NVIDIA today, I'm going to buy the shares of stock. And this is a caller trade for you that are maybe a little bit new. I'm going to get into the trade. In fact, let's just do a quick run through a caller trade really quickly. All righty, let me get my information so I sound intelligent. I would buy NVIDIA today at our market close at, so you buy to open 100 shares for, where'd we close at today? We closed at 126.46. So what is the risk in the investment? If I buy 100 shares, or let's just say 1 share, but if we buy 100 shares, so let's go to the 100 shares because that way it's going to be easier to understand. $12,646. If I buy 100 shares of NVIDIA, what is the risk in that investment? Bruce, we're kind of picking on you because you're one of the new guys here. The other 30 of us already know it. But Bruce, if we were to buy 100 shares of NVIDIA, what's the risk in that trade? And the rest of you are more than willing to answer, but I'm primarily looking for Bruce's comment here. Picking on the new guy. And if you don't know, just do a couple question marks. I know some of this might be new for you. So do a question mark or two if you don't know. And Bruce might be a slow typer, but I see a couple other comments coming in. The risk of it going down, couple question marks. So what is the risk? The risk is every freaking penny. We could find out from South Korea that NVIDIA was having Chinese chips put into it and they could go out of business overnight. At least here in the US, we could find fraud on how they cook their books. In all honesty, every penny in the $126.46 stock is at risk. So that's something that's important to understand. So what do? We buy to open We're going to call that a BTO. We buy to open a long put. A long put is the right to sell your stock, can't type, at a certain price for a certain period of time. In this particular model, I've grabbed the price at 1088. It is a October 2024 2007 long put. It cost $10.88, was the last time that it traded. So we buy to open a 4 October 127 long put for a whopping $10.88. New cost basis is the stock 126.46 plus the $10.88, which means if I do my own math, I do it all by hand, but I don't want to mess it up. 126.46 plus 1088. Our new cost basis is now $137.34. This one's for everyone. What is the new risk in the trade? And we're doing this on a per share basis. We just spent money for a long put, which gives us the right to sell our stock at a certain price for a certain period of time. What is our new risk in the trade? Minus the right to sell at 127 equals $10.44 per share. Or if you were to take that $10.44, divide it by 137.44, or 7.59% of the total invested capital. So Bruce, your new one here. What, Bill, you're saying I should type it right? Let's do it one more time. 1034 divided by 137, 44.52. So Bruce, just as a heads up, while everyone else is getting into these high flyer stocks, while everyone else went through 2008, 2010, 2020 big pullbacks, everyone had every freaking penny at risk in these funds being told, hey, hold on, it's going to come back. 2008, it took what, 7.5 years, 7 years, 8 months to come back. The 2000 crash, it took till 2012 to come back. People like me that are supposed to be helping people and protecting people's portfolios are telling you, hey, you got to wait it out. Don't take your money out so I can keep getting paid, and it's going to come back. The question for everyone needs to be, they need to be thinking about, especially right now after this big run we've had in our market, is it worth the risk to lose half of the value of your portfolio? Or would you like to lower the risk down to 7.52% of your total invested capital? And we can make that even lower because you know what? NVIDIA had a really hard time getting over 140. So if you wanted to lower the risk, we could sell to open, can't type, a short call. That is, you're obligated to sell your stock at a certain price for a certain period of time. We chose the $140 range because, did we? Yep. Because it couldn't seem to stay above 140. In fact, if we look at a chart on NVIDIA, yes, it did get above it for like a day. 141 and change, right? 141.67 maybe. And then it fell down. So 140 seems to possibly be an upside top for NVIDIA. When you sell to open, you get to take in a credit. And the credit we saw today was $9.23, was the last traded short call for $9.23 of credit. If we talk about an overall risk in the trade, until the long put protection expires in October 4th, we have $10.34 minus $9.23. This is going to blow your mind. $10.34 minus $9.23. We have a total risk in the trade of $1.11 per share. Or if we take that $1.11 and divide it by, let's do 129 roughly, we have a 0.008. So 8 1,000ths. Can that be right? 1.11 divided by, yeah, it's not even 0.8 of 1%. So it's 0.8 of 1%. 0.8 of 1% at risk of your total invested capital. To put that into an easier understanding, for every $1 million invested in this collar trade, you have $8,600 at risk. That's how I would structure a new position getting into NVIDIA. Now, maximum reward is equal to new cost basis of 137.34 minus obligation to sell at 140, plus you always get to keep your credit. So doing this funky math, 137.34 minus 140 gives you $2.66. You get to keep your credit in there. Gives you roughly $11.89 of profit. Divide that by your 129 equals a 9.2% return on Capital. Return on investment. And it's funny, if I was like everyone else, I'd annualize that and I'd multiply it by 6 and say, hey, here you go. Abraham asked, why do you choose the 4th of October, not only going out to the 20th of September? Why did I choose 2 more weeks? I chose 2 more weeks because I believe it's uncertain what the market's going to do. And because I believe it's uncertain what the market's going to do, you've got to, I need more time. I need more time, and I can't see everything evaporate with opportunity crush. This is probably going to be a 4 to 6 week unraveling of accounts trying to decide how they're going to rebalance. Okay, number 3. And no, I'm not trying to pick on one candidate over another. But taxes are eventually going to go up. If you don't understand that, you don't understand the debt that our country is in. But we have a huge problem with a platform on taxes. And I'm not saying that they don't need to go up. I understand taxes will most likely need to go up. But over the weekend, if you dug into the newly released tax proposal, which is kind of a recap of the Biden tax proposal, we have 2 huge problems. Huge problems. The taxes are supposed to be on the ultra wealthy. But they are written to screw the middle class. So does anyone know what I'm talking about? Did anyone spend the weekend going through platforms for candidates? Yeah, there's a big one. Let's talk capital gains. Capital gains for those, and here's the term, making over 400K will pay a long-term capital gains of 44%. That is the way that it is written. I have no clue who the hell legally came up with making. It's not defined as income. It's not defined as stock market. It's not defined as passive investment, long-term investment. Making is the term. So here's a question to every person in this group. Has anyone's home price gone up $400,000 from when they bought it? The other problem is it's also open to a sales price. Can anyone sell their home right now for more than $400,000? We're talking capital gains. Does anyone have a 401k that is over $400,000? if you have a home that will sell for over $400,000, if you have a 401k over $400,000, you are at risk at losing 44%, the way that it is written right now, to capital gains taxes. On the ultra wealthy, it's a little bit even worse, but on the 100 million or more capital gains, and this is now individuals and corporations, are subject to a 25%, and what do they call it? A 25%. Speculative? Dang it. Why do I not? Oh, it's an unrealized. It's unbelievable. An unrealized capital gains tax. Meaning, if Apple can make more than 25%, they're going to have to sell off a crap ton of stock, because if in a calendar year the stock appreciates by more than 25%, even if they don't sell it, they're looking at a 25% unrealized capital gains tax. It's targeted towards the billionaires. I get it. How is that going to affect you if the stock that ran up most into the year has to be sold by these people? Someone just asked, so 400K would have to be the gain, right? That's the way it's said. The way that it's written is the sale, making. There's no technical accounting term that's used. So it's interpreted as the gain. In writing, it's a sale over $400,000. This is the most piss poor written idea slash legislation slash trying to be legislated I've ever seen. But there's one more that makes it worse, and it's regarded to taxes. Good comment. Won't pass, just a talking point. I want to believe that, but I've seen crazier things pass. And the fact of the matter is, our country needs higher taxes. I could see this passing for 4 years and obliterating retirements across the board. It would put me out of business. But we have a worse thing as well. What are the majority of U.S. workers classified as? What's the majority of U.S. workers classified as? Middle class, W-2. It's actually not W-2, Maud. Blue collar is true, but that's not true because blue collar means you work for a corporation. If you go to the U.S. Treasury and the IRX, perfect. There you go. Leave it to Maud. Mary, I'm disappointed in you. Maud got to it first. Small business. And it's like 62% of taxes come in as a small business tax. Anyone know the most common small businesses? What are they called? There you go. LLC is one. Any other ones? S Corp and C Corp. I would think that's the majority of the small businesses. I agree. Which is 62% of those of us that are running our personal taxes are doing it under the classification of a small business first. So our taxes first are small business, we take our deductions, and then goes to personal income. We take our personal deductions, and then we pay taxes. Now the business pays some of those taxes on the business side, we pay some of the taxes on a personal side, but 62% of all IRS taxes, which is more than the majority, are classified as a small business because you run your small business taxes, filter it down to you through an LLC, an S Corp, or C Corp. So, what does this mean? Corporate tax rates. Going to 28% or back to 35%, which equals a 33% to a 66% higher taxes on your small business. Again, it's written as a corporate tax. A corporation, a limited liability corporation, an S corporation, a C corporation. It is intended for big business. But I have loved the last 8 years of my taxes going down by roughly 35% for me. I get it a little bit differently. Once again, very poorly written. It is an increase in corporations across the board. It's not corporations that are 1,000 employees or more. It's not corporations that are 10,000 employees or more. It is written as corporations. It's exactly the way that it was written in the Biden platform. I understand taxes need to go up. But if they want my vote, it needs to be written significantly better. All right, big picture, warning. We're going to get our 25 basis points. This will most likely be a buy the rumor, sell the news. 25 basis points is not really going to affect us one way or the other. The key is if we will continue to make the cuts. We went up in a year, what, a year and a half, 525 basis points. Will we see 152? I mean, do we need a 5.25%? Maybe with inflation, we don't know. But it's not about the rate cut. It's about the path to continued rate cuts into the future. With all due respect, Powell has gotten significantly better. Night and day difference from when he first started till now. But it will be huge for him to telegraph a pattern of continuing lowering rates while he's fighting unemployment, while he's fighting inflation, while he's trying to avoid a recession. The risks have never been higher to be protecting your portfolio at this time. Our goal is to obviously be protecting the portfolio right after we see these runs higher for both maybe NVIDIA and the stock market. Dow hit an all-time high today. Too bad most people don't trade just 31 stocks. Looks good, new all-time highs. Risk of a triple top, but it seems like we have room to grow, except for institutions seem to be over purchasing these 39 stocks. Not quite a big stretch, not like before when it fell down, because our 50-day is moving higher. So it looks like we do have some upward run on the Dow Jones Industrial Average. The S&P 500, it is also bullish in after 2 weeks. Problem with looking at the S&P 500. The formation does not look like we're building a base. Only because we're coming at our top right here. This formation with the V in the recovery, the V-shaped recovery, is a pretty common chart pattern. Let's erase it. This is a pretty common chart pattern for a double top. And the way that we're building our base, we're not doing flat, we're doing up days, down days, big up days, big down days. We have a double top pattern forming on the S&P. It can't get over the previous shoulder. Scary chart formation on the S&P 500. Last but not least, the NASDAQ, still bullish. But boy, is it fighting the 50-day. You want to see it get back up to its highs. Wednesday after the market closes, I think it's after the market closes for NVIDIA, could make a big difference. If NVIDIA tanks, we're breaking the 50-day, and we've got a long way down to the 200. We might actually stop right around 16,700 because it's our gap, the building of a base. We could lose roughly 1,000 points, technically speaking, on all those algorithm traders on the NASDAQ. Might be a great trade just to stick a couple puts on the NASDAQ if it breaks that 50-day simple moving average, just as a trade to make some money. In September, October historically are the worst and third worst down months of the year. I'm just throwing down 2%. I do not have a number yet. I need to calculate it. Earnings, we're on our second week of sales. Nordstrom's is on Tuesday. Abercrombie and Fitch, Kohler's, CrowdStrike 5, Hewlett Packard, CRM, NVIDIA. On Thursday, American Eagle Outfitters, Best Buy, Burlington, Dollar General, Dell, Gap, Lululemon, Marvel, Ulta. Second week of retail sales. Economic reports, durable goods, which was remarkably poor. Sorry. Durable goods was remarkably good, 9.9 versus 4.0. But you take out the transportation, we were negative, 0.2. So you take out boats, planes, automobiles, people can't afford to buy dishwashers, refrigerators, those kind of things, which is funny because I have to buy a dishwasher this last week. Big movers are going to be on Thursday with low volume with GDP numbers, pending home sale numbers. Friday, PCE. The good news is our inflation should be coming down. Looking at gas prices. With low volume, we could see a big up day on Friday. Just something to keep in mind. Interesting article on Baidu. I am really tempted to let it get put to people, but I haven't made that decision. Again, I've got interesting information on their earnings calls, so you can see what I see number-wise, where you just shake your head saying, man, this thing should be going higher. Very interesting article. Boy, I guess I got 3. I'm trying to talk myself into staying into Baidu. Can you tell? 3 articles on Baidu. Please work your numbers. Traders are confident this stock will rise after earnings, according to the options. The call or the put call ratio is way skewed towards the calls right now. A lot of people going high if you're a contrarian. Something to keep notice of. I've got the article on the Biden-Harris proposal. It's not fair to Harris because a lot of it is like Biden's, but she's made changes. So it's not the same platform as Biden. You've got to dig into the numbers yourself. With that said, questions. What questions do you guys have that I can answer for you? What questions do you guys have that I can do any answering for you? Gonna give you 30 seconds. Mary, very interesting question. So let me put it this way. Just like in trading, you guys need to do your own research. My job here is not to promote one candidate over another. And I'm not telling anyone here what to do. If you want me to rag on Trump, he's a jackass. He can't keep his mouth shut. He's rude and arrogant. He has no understanding of middle America. The guy has no understanding of what middle America lives through. With that said, I do give him a pass on going bankrupt. That's part of business. I've seen him not be racist. I've seen him give money to the middle America. But as a person, I hate the guy. I do. You have to do your own research. Do your own research. And the scary thing is you need to get it from multiple sources. You've got to look at multiple sources and what they've done in the past. Make your own decision on what you're going to do when you vote. I'm scared right now. I'm looking at where my business runs and taxes. I know they have to go up, but I can't vote for what's there. For what's being said is different than what's being written. What's being written is how they're going to try to put in the legislature. So that's just myself. In fact, you guys should be checking what I'm telling you too. I mean, the short answer is I try to bring it where I'm getting it from, but please, guys, you should be doing your own research on me too. Everything I'm putting down into writing, it's for you guys to check. It's for you to verify and hold me accountable. All right. Any other questions? All right. Well, with that said, I don't see anything coming in, but if it does, please type it in. I'll make sure I answer it. Markets closed on Monday. Thursday would not be a great place to trade, but if Nvidia falls or we break the 50-day on the NASDAQ, a long put at that 50-day could make you some really good money for those of you that are trading. That's also great protection on portfolios, FYI. We'll most likely pull off next week's trade findings and adjustments, and we'll change the commentary from Monday to Tuesday. So please check your email, but most likely we'll do the next Hurley Investments Market View commentary. The plan is to do it next Tuesday evening. All right. Let's see. Bruce, welcome to our group. Love having you here. I don't see any more questions coming in, so I love it, Bruce. Thanks for having you guys here. I'm going to run on you. This will be posted on myhurleyinvestment.com tomorrow morning. I'm trying to get Dave to help me get these posted a little bit sooner so that you can see this information. But this will be posted tomorrow morning on My Hurley Investment, singular there, myhurleyinvestment.com, where you can rehear this and you'll be able to grab all these notes yourselves. Guys, I appreciate you being here. Thank you very much for putting up with me tonight. With that said, thank you guys. I will look forward to seeing you next Tuesday evening. Bye-bye, everyone.